On behalf of CrossCheck Media and Biz Talk Today TV, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in fun and sunny, scorching hot Scottsdale, Arizona.
110 is the new 95, okay, Todd? That's how I'm saying.
I love it. We always get comments from viewers and listeners. They love it when we open with that about the weather in Scottsdale. So maybe we have a big fan base.
Well, particularly in the winter, they love it, don't they?
Yeah, right, no doubt. So with us today is a very special guest, actually, a first-time visitor to Buy, Hold, Sell. Jed Ellerbroek. He is a portfolio manager at Argent Capital in St. Louis. And Jed has all kinds of great things to say because he's bullish, just like I am, and maybe what Toby is as well. Jed, welcome to Buy, Hold, Sell.
I've been bullish since March 12th, okay?
Jed, welcome to Buy, Hold, Sell.
Hey, great. Thanks for having me. Good to be here.
Absolutely.
And that is not dead. That's
No.
always good. It's always good.
So Jed, I got to ask you, we were just talking off camera leading into the show, and we were talking about what can really propel this market higher. You brought up an interesting thought. Maybe if the president just focused more on being a salesman rather than the tariff guy. But is that what's going to really stick? Because right now, as you know, we're talking to the Chinese now in London trying to get this tariff deal.
Ooh.
Yeah, geez. So what, 35 days to go or so until the end of that 90-day period? I feel like as we get closer to that, that's going to take over the front page of the, financial section again. But in the meantime, I've been really enjoying earnings season here over the last month. And I feel like the biggest takeaway from earnings season for me has been that the AI investment, the AI trade is going really, really strong across really most of tech.
Yeah,
Okay.
it's I'm sorry. It's not Jed, it's Ned, right?
No, it's Jed.
Jed, okay. I say Jed is not dead. I'm sorry. I keep thinking of Beverly Hillbillies. So the AI, we call it the AI data center tech stack trade. And that's, I'm a growth investor. Our company's Transformative Research. So we actually look for transformational change. It was very intriguing to me to see, these type of I call these, well, there's another word I use for them, straight up stock charts. We used to call them Viagra charts in my office. And the whole idea that we had fundamental buyers, then we had momentum buyers, then we had retail buyers, CoreWeave, my favorite, and are we running out of gas, though? Or are we running out of new bodies?
Yeah, I don't think so. I think NVIDIA at 29 times earnings is, reasonably priced relative to its history. I think the argument against that as well, they're doing $190 billion worth of data center, end market semiconductor sales these days. They've never, been even a fraction of that. So the multiple should be lower. But gosh, it at the same time, it feels like we're still kind of early in this AI data center build out, doesn't it? I mean, AI exclusive data centers are still in the construction phase. They're not really open yet. Stargate's still heavily under construction. So it doesn't feel right to say that semiconductor cycle year 3 is early. That's semiconductor cycles are much shorter than that. But I think this is the first time since the 1990s where that's been true, where year 3 is still kind of early.
Yeah, it is a secular shift. Do you worry about, as I worry about a little bit, the actual use cases, at the enterprise? So we do some enterprise software, but we're everything. My favorite stock, by the way, right now is Micron. Why? Because when you sell memory to freaking PCs, it's like $12. When you sell the memory chip for NVIDIA, it's $25,000. I mean, it's 150 times more. To me, that's where we're excited about is these pieces where they have, greenfield all ahead. Never had a $25,000 memory chip. Never heard of one. Sort of Broadcom was one of the ways. So what are some of the names that you like?
Yeah, we own Broadcom. That's a decent sized position in our Argent large cap strategy. We like that ASIC business. Those customers, the largest tech companies, the largest cloud computing businesses, this is not an acceptable situation. Their extreme dependence on NVIDIA for the
Yeah.
data center, I mean, that is just not acceptable. So they are going to invest like crazy to come up with their own second option because AMD hasn't really gotten it done. So I think that those customers are going to show exceptional commitment to those ASIC programs. It takes a long time, a lot of money to
Yeah.
get those up and running. Google's been successful. They're on, version 7. Amazon, I think, has been successful. You could say they're on, heading on to version 3. But OpenAI, Microsoft, Meta,
Yeah.
ByteDance, they're coming along behind, and they're going to invest really heavily too. And that
Todd,
bodes well for
Todd,
them.
we actually have a portfolio manager who understands the AI tech stack. This
Yeah.
could be a first.
Yeah, no doubt about that. Definitely a
And
VIP
for the
guest, that's
people
for
at
sure.
home, an ASIC is an application-specific integrated circuit. It's a custom product, which basically says, NVIDIA, screw you. We're not going to be a hostage to you, right? Right now?
Yeah, they can't. They can't be. These businesses are too big, too successful, too many financial resources, too many technical resources for
Yeah.
that to be acceptable.
So, Jed, at Argent, are you just, I mean, give us an idea, give the audience an idea. Are you just looking at equities? Are you also, is your allocation also on the bond side? We just want to get an idea of, or is there a specific sector? Are you just focused on tech?
Yeah, yeah. I run Argent's large cap strategy. That is a concentrated, low turnover approach. We own 30 stocks across the entire, U.S. equity landscape. And we have about 20% turnover a year. So we're looking to find, 3 or 4 or 5 or 6 really good new ideas every year to bring into the portfolio. And we're trying to get as much of the portfolio as we can concentrated in our very favorite ideas. Our favorite idea today is Amazon and has been for probably the last year or two. We think that's just an exceptionally well-positioned business in both retail and the AWS business, and we think they'll be a huge AI beneficiary as well.
So you think on the cloud side, that's the real winner out of all the cloud computing companies?
Well, we like them all.
Okay.
Amazon is our favorite stock today, but we own Google as well. Like GCP, like Waymo. Excited about YouTube. Obviously, there's the regulatory threat that kind of overshadows the search business, but we also own Microsoft. That's our second largest position. And yeah, Azure is our favorite part of Microsoft.
Well, Todd, you got to look now. Amazon could get out of freaking selling tchotchke on their site because their cloud rental service is so large, so profitable. Same thing with Microsoft. I have a neighbor who's a senior VP who works in that space, and he'll come in and he'll say, "Toby, I don't even know why we're in the software business anymore. The AWS is just crushing it. They're building 13 between those two guys, 13 data centers, not just in the United States, by the way, obviously. But I'll give you one just to look at. Credo Technology, CRDO. I call it like the cable man of those sites. I was out in Texas a couple of weeks ago at a site being built. There's 2.5 miles of Credo optical cable per center, and that stuff is expensive. And I believe that they are now sold out for the next 12 to 18 months. And they're trying to, add capacity like crazy, but the technology of making what they do. Have you looked at that company?
Yeah, a little bit, not a ton.
Probably a little small for you. I get it market cap wise.
Yeah. But we have a small cap strategy that might be interested in that one as well. Yeah, when the AI thing started a couple years ago, I was pretty skeptical and hesitant to invest in AI infrastructure companies because I feared that, that they would be winners in the early part of the cycle, but then it would, transition, and the winners would be the platforms, the software, et cetera, the products built on top. But gosh, we're still in the time when the infrastructure businesses are the top performers doing exceptionally well. And the software businesses are, you see business building going on. You see ServiceNow, up over $1 billion in ARR from their AI product.
Right.
You see the coding assistants. I mean, that's probably taken off the most.
I mean, GitLab and the other.
GitHub, GitLab. A couple private companies are doing really well and raising, big funding. I think all those AI businesses, all the new, AI-based businesses, you don't need as many employees to start them. And I think that's leading to a flurry of new businesses being formed, and those companies are going to use the big cloud computing platforms as their backbone. And so I hope and expect that that'll produce significant growth for Microsoft's Azure, Amazon's AWS, and Google's GCP.
All right, let me throw this one at you though. So on the other side of this is essentially Cloudflare and everybody else who are on the edge, meaning that you don't need a data center. We have a company that we invest in, it's way small for you, called Versus AI, and they are all PC to PC or PC to phone, all on the edge. So they don't need a data center. They use about 99.8% less energy cost. And we like cloud simply because, or Cloudflare, is because they're by far the largest edge provider out there. What's your take on an AI on the edge?
Yeah, developing rapidly. Yeah, I think Cloudflare is an excellent business. We like cybersecurity as a general investing theme quite a bit. Microsoft is the biggest cybersecurity company, although their products aren't terribly well regarded. They just have this tremendous enterprise sales effort.
My senior vice president sells that stuff, so don't say that too loud, okay?
Okay.
He's the head of cybersecurity there.
Maybe you can cut that one out. But we own Fortinet, which is
sorry, Hugh. It's it is what it is. Okay.
Right. We own Fortinet. It's a company that we've owned for a long time. And their traditional physical firewall business might be considered outdated by some, but they've just done a tremendous job building this SMB client base and then cross-selling the heck out of the new, more advanced kind of cloud-based products.
Okay, SMB, we got people out there that don't speak acronym. You mean small business,
small and medium-sized businesses.
Okay.
Palo Alto's, done traditional. They've been the enterprise. They've served the enterprise with the traditional firewalls. That's a very good business too. But we've always kind of liked Fortinet for their free cash flow, and really like the management team there too.
So not Checkpoint Systems.
Checkpoint is slower growing. Done less. I feel like been less successful in R&D and new product development. We really like how Fortinet has their M&A strategy is basically buy small, mostly failed venture capital backed companies for the technology. So they buy them cheap and then integrate the technology and rebuild it under their own platform.
Yeah, that's a great point. CrowdStrike, was trying to do that, and then they sort of got so big. He's another guy. He's a Scottsdale guy, by the way. He's building a $6 billion shopping center, apartment complex, et cetera, et cetera. Because when you have 28 billion, you got to do something.
Yeah, right. Hey, Jed, one company you haven't mentioned is Apple. Are you a fan?
Yeah, we do own Apple in our large cap strategy. We are underweight versus the S&P 500. I wish they were further along with their AI effort. I wish they had AI products out on the market today. They don't. But gosh, I just keep coming back to they own a significant chunk of the edge. They have the devices in all of our pockets. The AI technology in the phone isn't very good, but I don't know anybody that's traded in an iPhone because of that. And so I'm trying to be patient.
Yeah, I'm with you. It's interesting that I don't know about you, but I'm sure you're like me. 25% of your time you're on some ChatGPT or some Perplexity or other thing. I did a research report today. I spent 15 minutes on Claude. I'm sorry, getting answers to stuff that was in the Wayback Machine that I would have had an assistant. Okay, hey Charlie, would you go look up, blah blah blah. If somebody's just out of college and they're coming out with $200,000 of debt, and I'm talking to you too, Todd, with your kids. Thank God they have scholarships. Starting off as an assistant, I don't know.
Yeah.
What is an assistant going to do other than do the stuff that I just did on my, phone or on my typewriter? Any ideas on that?
Yeah, I started off my career as the most entry-level employee at an investment consulting firm in Minneapolis. It's been bought, and sold a couple times now.
12 times.
Different name, but I just did basic data entry. putting stuff in Excel spreadsheets, putting stuff into presentations that were shown to clients. Humans aren't doing that work in the future.
They're not doing it now.
Right. Yeah. Have you guys heard of FinTool?
Oh yeah, I use it all the time.
Yeah, we just signed up. It's a really useful AI product for investment people. And I had dinner with their executives a couple weeks ago. They only have 6 employees.
Right.
They don't hire entry-level employees. They only hire experienced coders that basically run Cursor all day long. 90% of their code is is generated via Cursor, not an actual human. I mean, that's a complete change in the way software is being written. Google says that a third of their internally developed code is done by, an AI tool these days. I mean, that's incredible. So yeah, entry level software engineers.
Yeah.
Nice knowing you.
Yeah,
Hey,
nice knowing you, right? Knowing
yeah.
how
Hey,
the
talk
smart
about
guys.
Cursor for a second, because you're about the 4th person this week who's talked about it. They're a private company, obviously, but they're like the #1 takeout on my private company list. How about you? What do you think of them?
Yeah, they're doubling ARR every 2 or 3 months. They're up over $500 million now.
Yeah,
OpenAI tried to buy them.
I know.
They,
And
they
guess what
said
they
no.
said? You're #1.
Yeah.
I love it. I love it. Listen, guys, let's leave it on that block, because coming up after the break, we're going to ask Jed about his investment process. How is it that he's coming up with these great picks for his portfolio? So you got to stay with us. And with us today is Jed Ellerbroek. He's the portfolio manager at Argent Capital Management out of St. Louis. Go to argentcapital.com to learn more. And we'll be right back after the break. Please stay with us.
Buy, hold, sell, brought to you by CrossCheck Management.
Welcome back to Buy, Hold, Sell. Well, with us today is Jed Ellerbroek. He's a portfolio manager at Argent Capital out of St. Louis. And Jed, I know we were talking about equities leading and the first block, but I do want to go back to the tariff talk. It's definitely going to be a subject that's going to really dominate headlines for the rest of the summer, if not for the rest of the year. And I'm sure Toby would actually think for the rest of Trump's term. But with all of that said, I mean, is that the only challenge that equities will be facing if we don't have a resolution on the tariff war?
I think that consumer spending, it's decent. It's not falling off a cliff, but it's not super strong either. I feel like you see the dollar store companies just reported a week or two ago. You see some real trade down there. Walmart's doing great. Typically, when Walmart's doing great, most other retailers are not. I think that's largely the case today. So, but AI is driving a lot of economic growth, a lot of investment spending, and so I think we're in a good, not great economy. Hopefully, the tariff stuff can be diffused without doing major damage, and a couple months from now, we can have a little bit less politics in our stock market life.
All right,
Okay.
so quit smoking crack, Jed. So I'm living the taco camp, because I just look at behavior and that repeats itself over and over again, and the Trump is always chickens out has turned out to be a great strategy. And so I'm in the taco camp still, Todd, and I am absolutely sure that. And again, Jed, just for your point, I've lived in DC for almost 30 years, have a lot of contacts there. And my GOP contacts were telling me about, this is why we got bullish, was that Saint Scott Bessent had come in and told him, and part of the GOP guys came in and said, okay, your approval rating is 28%. We're going into a big election where we could lose our majority here. So step off the gas. You made your point. Let's be the great negotiator that you are. And this idea of 145% tariffs, really? Come on, not even China believes it. And so I go to Bessent as a guy, Todd, that really, I believe it's a come to Jesus moment.
Yeah, and according to Bloomberg News today, they actually were reporting that it looks like that when Powell steps down, Bessent will be stepping into that role, or at least try to
Oh,
go
interesting.
through the confirmation. But that'll be
I know
interesting.
he's only worth like $6.5 billion. He just bought a house down in Georgetown that I used to go to for like events. That's only like $24 million, and he wants to be the the head of the Fed.
Yeah,
Wow.
that place you went to for events. I think that was the Tombs Bar over by Georgetown University. But
Very
that's
close to it.
there
Very
you
close
go.
to it.
So, Jed, I want to ask you about your investment process here. When you're looking at a company, because you said that you're holding on to these positions for years, you actually have to really visualize that this is a company that's worth holding for that long term. What goes into the process, though? I mean, I know the audience will love to know that can, how you pick that should be able to help them pick for their own portfolio.
Yeah, sure. The standard we call enduring businesses. For us, that means three things. That means businesses that are growing kind of on a secular basis, not just in one year because the economy is good, but
Yeah.
durable growth over the long term. Two, a management team that allocates capital in a shareholder-friendly manner and has a track record of doing that. And then number three, a competitive advantage over their peers that we trust is durable. Those are qualitative assessments that our team assesses. We take the 1,000 largest companies in the U.S. market, and we picked our top 100 on that standard. Those 100 are identified and tracked closely, and then from that, we narrow it down based on valuation, risk assessment, trying to keep some balance in the portfolio, and end up with our 30 favorite ideas.
30.
Cool. Now, is it Argent, Argent, by the way?
Correct, which is coin in French.
I was going to say coin. Todd's from Buffalo, so it's hard for him to
I am not
pronounce
from
the T.
Buffalo. I'm not from Buffalo.
I'm sorry. He's from Baltimore, but
Baltimore.
it's the same thing. He has a hard time with the T's. I don't know why that is.
God. So go ahead. So you have 30 picks. So are you looking at 30 companies then that you're investing in? And you're not going to invest in all 30, right?
Yeah. We
Yeah.
own 30 stocks in our large cap portfolio. That's right.
So then what's the decisive factor as far as liquidating and moving away from that position?
Yeah, we try to hold so long as our investment thesis, those three kind of core tenets are in place. We sold United Healthcare earlier this year because it was obvious that the company's management team did not have a very good handle on the business. That was a violation.
Well, that's the understatement of the year, Todd.
That's right. I try to keep it subtle here.
We don't
so that's
do subtle
an example
here, Jed. Okay, just FYI.
That's an example of one reason why we sell. Another one is when a company's valuation reaches a level that we just can't really defend and justify. FICO is an example of that. We think that's an awesome business. The stock tripled from when we bought it in 2023. That was a great outcome for us. But the combination of their pricing-led growth strategy with the government and the Trump administration's obvious desire not to see prices go up and inflation occur, we just felt like was a situation that was combustible. So
but that's a great call, though, because FICO is enduring, is secular, is durable, meets your entire criteria. They have, it's like one of those businesses. As the marginal return on the next dollar above their sales is like 98% profit margin. And I'm surprised you didn't say profit margin, because that was FICO to me was like a crazy thing. People at home, you know what your FICO score is, okay? Well, almost every credit decision made in the United States, North America, and more in Europe is based on your FICO score. And you cannot run a credit business without FICO, obviously. So I love it. But I also love the fact that, when it got to about 75 times forward earnings, and, you got to say, man, we made a great call, but now it's different than when we bought it, 300% ago, right?
Victory.
Yeah, I declare victory.
No.
All right, Todd, we're going to have Jed back on. I'm going to help him find like 2 other stocks that he's not looking at now, because now I'm concerned. I'm really concerned that, he's going to trail the market, and I don't want to see that.
I don't blame you. So then before we get
into
into returns, I do want to ask you, though, so do you rebalance? Is it auto rebalancing, or do you just let your winners run?
We do try to let our winners run. That's, I've been in this business for a little over 20 years now. And one of the one of the lessons I did not understand when I started, but I sure do now,
Yeah.
is to let your winners run. Obviously, there are exceptions to every rule, but a rule that we try to follow is to let our winners run because, as a portfolio manager, you guys know this from your experience. You spend so much time thinking about risk and downside and the bad things that could happen. You just don't have enough time to think creatively about all the awesome things that might happen. And American business and capitalism is a special thing. And sometimes companies exceed even your wildest hopes, and you want to
I
leave
like
yourself
that.
open to that.
Yeah, that's
Well,
rare,
yeah,
Toby. That's very rare, Toby. You usually have
yeah.
portfolio managers that say, no, I got to keep that even balance going. But I like that approach.
Well, Jed, I will say this. So I've been in 3 secular massive technology transformations, and the one thing I learned was that my imagination was not nearly big enough.
Mhm.
And you don't, God, the PC came out in this, and I was at the Apple conference. I asked Steve Jobs the first question at that press conference. Did I think that little stinking iPhone was going to become, the most, valuable company in the world? No. Um, Same thing on PCs. Dell when they came out. Then Blackberries. I'm sure you've never heard of BlackBerry, but
I had one.
yeah. Well, now that I know you've been doing it 20 years, I'll give you more respect. Um, that was unimaginable. JDS Uniphase, Todd, remember in the old
Yeah.
days? Sun Microsystem. The point I'm making, that Jed is making, is you got to let your imagination not be a barrier to these massive global transformations. AI, when it actually is agentic, when you actually have a piece of software that says, Toby, you got 13 minutes to go because you have to go to the dentist, and I just called the Uber. Then this becomes real to the average person. But I totally agree with you, Jed.
Yeah, and
The
real quick.
manager that just thinks about, oh my gosh, if I trail by 1 point, I'm going to lose my job. I don't
Yeah.
want a fraidy cat. I want someone who is pushing the envelope.
And is it only available directly through Argent, or do you have other distributors?
Yeah, no, it is available to anyone, anywhere. We just about 45 days ago, opened up an ETF version of this large cap strategy, ticker ABIG, ABIG. We actually have
ABIG.
3 ETFs now. Yeah. Our marketing department ran wild with that one. We have ABIG, AMID, and ALIL.
Hey, listen, I'm such a jack off. There was like 3 things I was going to say, but out of respect for you, Jed,
Thank you.
I didn't say that.
Thank you for not sharing. You'll enjoy our small cap strategies ticker is ALIL, ALIL. That's our most creative one. That's very I don't know, Gen Z of us. We're excited to have 3 open.
ALIL and ABIG. Well, they're right there. The symbols are right there on the screen, right at the bottom of the screen right now. If you're listening to us on all of our major platforms, streaming platforms, you definitely want to see the video, as we'll also be providing charts. So that's fantastic. Jed, we're going to leave it right there. We're going to tell the audience you got to go to argentcapital.com to learn more about what Jed has to offer, and you definitely want to take a look at all of the funds that they have. So a lot to look forward to for your portfolio.
Yeah, great to meet you. Glad to get an actual stock picker who actually talks about stocks on our show.
Fun show, guys. Great talking to you.
Absolutely. So on behalf of Jed Ellerbroek and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. This Friday on Wealthwise, we have Anthony Scaramucci, who is going to be joining Jeffrey Hirsch for that show. And then next Tuesday, Buy, Hold, Sell, we have Maria Dreyfus. She is the CEO of Argent Capital. She's going to be joining Toby and I. And then Wednesday, Jillian Murish is coming back with Toby on a one-on-one for Money Mavericks. A lot to look forward to here at Biz Talk today. So we'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.